The Chinese yuan is one of the most popular world currencies, thanks to China's influence on the world economy, including its influence in Africa and Latin America, where China has pushed to expand its commercial influence. However, in the midst of this, China's economy and currency are in trouble. There has been concern that emerging markets have lost their anchor as a result of the yuan's decline to a 2-year low. They are in a bear market, and it's spreading rapidly. Welcome to Savvy Economists. In this video, we will discuss the Chinese yuan and how it's super sliding down quickly and won't stop. We will also discuss the effect of this on the Chinese economy. Keep watching. However, in the meantime, don't forget to please like and share this video if you enjoy it. Also, leave your comments and thoughts below, and don't forget to subscribe to the channel for more related content similar to this. Aside from Beijing's tight links to Moscow in the wake of Russia's invasion of Ukraine, the connections have sparked worries that China would be subject to Western penalties if it supports Moscow. This includes the great worries about a citywide lockdown in Beijing, the onshore Chinese yuan dropping to its lowest level in more than 2 years. Investors have been pulling money out of China since the beginning of the year, 2022. Judging from recent statistics, there has been a lot of slopes down of the Chinese yuan, which is very glaring. The largest daily decrease of the Chinese yuan was recorded on August 3rd. Then the People's Bank of China set the yuan reference at 6.7730 per dollar, 0.5% lower than the previous print. This figure was essentially in line with the consensus expectation from an analyst and trader poll conducted by Bloomberg, as they have been monitoring the Chinese yuan and its strength. After the central bank decided to relax policy in opposition to the tightening trend, the offshore yuan fell drastically by as much as 1.2%. This made the dollar stronger against the Chinese yuan, as it lost about 2,000 basis points against the dollar. In the same month, in August 2022, the yuan fell for the 6th month in a row. When measured, it had one of the worst performances compared to other Asia currencies this quarter. And aside from that, it is likewise down approximately 8% against the dollar this year. With this drastic decrease, many are losing hope in the currency, as more than 60% of readers online and at the terminal projected that the currency, which is approximately 6.8 per dollar, believe that the currency will still decline to 7.2 per greenback. In fact, a lot of analysts are lining up to forecast a decline in the yuan. Many interested in China and its economy are skeptical because of this constant devaluation of the currency. If the Chinese currency continues to fall, it will create not only financial market shocks but also cause other negative effects. Looking back, the devaluation of the Chinese currency dates back to 2005. When the PBOC ended a rigid peg on the dollar in 2005, this was a condition of the agreement. Then, the main complaint at the time was that it wouldn't allow for quicker appreciation. The entire globe was enslaved by China's currency and exclaimed in awe at every gain and superlative that was offered. On track to grow by more than 14% in 2007, the GDP expanded by 11.4% in 2005. However, these days tend to be even more gloomy than growing. For years, growth has been consistently entrenched in the mid to high single digits. And then the pandemic made it worse. It caused growth to fall to 2.2% in 2020. And according to analysts surveyed by Bloomberg, it is once again slipping lower and may be less than 4% in 2022 after an excellent recovery last year. One of the notable negative impacts of this decrease is the loss of value of the Chinese yuan not only in China but worldwide. As a result of the fall in the Chinese yuan, there will be a decrease in the investor rate in the Chinese economy. Specifically, there is the possibility of greater interest rate differentials between the US and Asia. And it would probably keep downward pressure on Asian currencies. Since the risks of a worldwide recession are also uncomfortably high, risk aversion was also a factor. According to research conducted by the Institute of International Finance, IIF, it has been recorded that foreign investors continued to reduce their holdings of Chinese bonds in July. They sold roughly $3 billion in holdings at the same time as China's stock market experienced $3.5 billion in outflows for the first time in 4 months. Aside from the pullout of foreign investors, the decrease in the Chinese yuan can also lead some Chinese citizens to invest more in foreign currencies than their local currency. This is where we see many Chinese citizens saving in dollars instead of yuan. The depreciation of Asian currencies would increase the amount of imported inflation that is passed through, increase the risk of capital flight, and push regional central banks to achieve a careful balance between hiking interest rates without endangering economic growth. Also, since China is the leading country in Asia, a currency decrease negatively impacts other Asian countries' currencies. The yuan is known to be stronger than the currencies of many other significant export-oriented nations, and since the epidemic started, Chinese manufactured goods have grown more expensive than rivals. The future pricing competitiveness of China's exports may also suffer from it, particularly in light of recent significant exchange rate depreciation in other major exporting nations. Recently, the yen, Korean won, Thai baht, and Malaysian ringgit are likely to feel the effects of the depreciation. The U.S. interest rate hikes have negatively impacted them. According to Wind, a Chinese source of financial data, the impact of the Chinese yuan devaluation has led to won to fall more than 13% against the dollar since the beginning of the year, while the yen and the baht have fallen by around 20% and 9.8%, respectively. However, the Vietnamese dong has only decreased by 0.3% since the start of 2022. But aside from this negative impact, a closer look at the devaluation of the Chinese yuan is beneficial to its economy. This is why most people regard the currency devaluation as a core manipulation by the Chinese government. China's exports become more competitive as the yuan becomes less expensive. This may aid the faltering Chinese economy, whose export growth slowed to its lowest level in 2 years last month. Also, policymakers may still prefer a weaker currency as long as the rate of depreciation is controlled. Also, this devaluation may be of great help to the yuan currency. It's a means for the Chinese government to achieve world dominance, supporting the nation's diplomatic objectives and reaffirming its position as a key player in the world economy. However, whatever the reason, the aim and the objectives are frequently clashed by opposing views and others who have invested in the currency. Hope you enjoyed watching this video. To support us, please watch, like, and share our videos. You can also subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.